Good morning, everyone. It is Wednesday, the 1st of February 2023. FOMC release at 2 p.m. ET today. Big news day, big news week. We also have NFP on Friday, so very interesting week. I love these big news weeks. We tend to get a idea of what's going to happen, especially now. It's the start of February. We're gonna kind of get a directional push for the month. It works like that in regards to each month kind of holds a direction or a range, and so this week is going to be interesting indeed. If we go to news quickly, just have a look at what we have there. 8:15 we had ADP, non-farm employment change. At 10 a.m. Which just passed, we had ISM manufacturing PMI and Jolt's job openings, and at 2 the FOMC statement. Okay, federal funds rate. So lots happening today. This needs to be taken very seriously in regards to trades on. You need to make sure all your trades are off prior to this. So if you are going to trade the session, I would wrap it up by lunchtime. You don't want to be in a trade that's open when the statement is released, okay? Because we know the volatility is unpredictable. It could go anywhere. This is where we put ourselves in danger with our strategy because of our risk rules and the way we manage risk. Having a larger stop loss and a smaller take profit, we kind of don't want to be caught in situations where price can run away from us in a directional move, and this is how we mitigate most of that risk, is by just staying out of the news. So FOMC is at 2. Now let's go do our normal top-down analysis from the daily here. Okay, holding 4,000, holding at 4,000. We are coming into 4,100, and it's going to be very interesting to see what happens here come today's FOMC release. Now, if we adjust this trend line here, we could say that we've penetrated this top area because we have 1, 2, 3 perfect hits, a fourth, a fifth with a penetration, and now a break to the upside here. So I have readjusted the S&P 500 just to reflect the possibility that we have actually pushed outside of this area and we're holding. It doesn't mean too much yet, okay? But the momentum definitely seems to have swung to the upside. And if you see the push here, I want you to take your eyes and look at this area here and just see how long that's been grinding to the upside for. We don't get that at any of these other times except prior, when the S&P 500 was grinding to the upside, okay? So I hope that's clear. This area, it's been bullish since the 30th of September, right? So we have essentially been bullish for October, November, December, January. So 4 months we've been bullish for on the daily, right? That has not happened since prior to this falling knife that we've had. You see that? Like, it's the overall direction is to the downside through the entirety of this period, from here to here. Okay, right? So what does that mean? Well, that means that right now things are bullish, and you don't want to be caught in any sells to the upside. Okay, upside potential is there's high probability of price pushing to the upside than the downside at the moment. Okay, it's holding strong here. There's been no strong sell-off, and so the only kind of selling I'm expecting is within this channel at the moment. Okay, kind of looks like it's holding this little channel here quite nicely, right? So some kind of selling back to here, and then a resumption maybe back up to here. That kind of action is what I'm looking at on the daily with the S&P 500. Okay, unless we have a strong smash and break to the upside during FOMC, on a very positive FOMC or positive non-farm payrolls release. So everything points to the upside for me at the moment. That's all you need to take away from that. We're not in a falling knife, waterfall selling environment at the moment. Okay. Dow Jones Index very clearly is holding above the bearish market condition that was there present till October, again the 30th of September. Okay, and more bullish than the overall S&P 500, but holding nicely in this region here. You can see this area of indecision. We're going to get hopefully some answers about what's going to happen with the direction of the US stock market today, between today and Friday. Okay, and either we'll get a strong push to 35,500 or a strong sell-off back down to 32,500 or 3,200. If it sells off, I would expect it to sell off down to this area here. Okay, why is that? Well, we have overhead sliding resistance here. Okay, strong level of demand through here. Okay, and it's where I see it going. It's hard to see. I'm trying to put it into reason of why I expect it to go there, but the reality is, that's where I see the order block. That's where I read this wave going. Okay, it's what I've seen multiple times over and over and over again. It does come back to this kind of sliding support area, sliding resistance area. Okay, especially for the first leg. So the first leg is either going to be here to 32,500-ish or 3,200 if we have a big sell-off with FOMC. But if I had to make a bet, I would say that we're probably going to get a dip back down a little bit and then a kick up to 35,500. Look, it feels pretty bullish. It looks pretty bullish at the moment, and definitely momentum is skewed to the upside. So that being said, if we go to the 4-hour here, we're going to see, just remember we're zooming into this area now. We got the 4-hour. We did end up having the push to the upside yesterday. Okay, it's quite small here from demand 33,500 up to 3,400. Okay, on the 4-hour. Right. This is the little move, kicked out of there. And just bunching up in a small range. Now, you can see that this action here is like quick compression. You've got this movement of energy. They get smaller, 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 and smaller. So we're compressing here, coiling up, so to speak, into a scenario where we will have a strong directional move in the very near future. Again, nothing really to point out except that we're waiting for FOMC, and I would expect a push up to supply 34,500 or a push down here into demand 3,300 and then a kick back out. Remember, it will kick into liquidity first before it kicks out. Zooming in now with the 1 hour, looking at this rectangular box here. We're going to zoom in. Okay, and now we've zoomed into this area. Okay, this area here, zooming into there. Right. Okay, and as we spoke about yesterday in the analysis, we were at the bottom of this channel here, and we did have a kick out of that channel. The kick out of the base of that channel, and move towards supply here. We ended up having a quite strong supply zone here. 3,400. Supply 3,400 is holding. And we can see the 1 hour is pretty clear about what's going to happen in terms of this channel, and I wouldn't be surprised to see price come back down here into demand at 33,700 and then kick out today, okay, at FOMC. If we have a bullish FOMC report, we might see something like this, okay, or even all the way up to 34,500. That kind of move could happen. Likewise, we might see a kick back up into 3,400, maybe a little bit over, and then a bearish collapse like this. Alright, so just be wary of that. Make sure you got just all trades off. Do not touch the charts when don't touch the charts when news is being released, especially FOMC or NFP. Okay. Reasons for that are, if we now zoom into this area here, we're going to go into this area on the 1 minute. Okay, and look at where we are now. FOMC can put in a move like that 2 or 3 times the size of the volatility bands, which, yeah, just leaves us in a bit of a pickle, to be honest, with our trading strategy. So best to avoid. It's paramount you avoid trading the news, and wait at least half an hour after the news to see the volatility in the wave pattern and make a decision. I would only be trading news if you've been trading with me for a while and you are comfortable with you feel the volatility bands, you understand what's happening. Because, for example, if news comes out today and price moves well out of the volatility bands, okay, and it moves back in, if you have cultivated the ability to see what the volatility bands are currently doing, so for example, if price is actually following say price was to push out and was following an area like this, and you knew you knew the volatility measure by using your eyes, then you could essentially draw in the volatility and short that. So that would be like drawing in an extra band. Let me make that a bit clearer. Try and do it. For example, here, it's not the best example, but I would draw my volatility as having a barrier at that height. So if you're privy to understanding the volatility bands and how they move, then you could trade the news afterwards that way. Just be aware that you definitely don't want to be, if you're still just like buying and selling the bands only, you're not looking at supply and demand levels in conjunction, then stay away from news until you understand more clearer how the volatility works. Now, yesterday I had trades scaled across this area of supply, right? Sell limit orders. I checked back at lunch and I ended up having one of them close. I'm going to show you here now. We had this one close here, okay, but as soon as I saw what was happening at lunch with this direction, I quickly removed all other sell limit orders. Now, we're so high up in the push for the day that you can see that price did kind of revert back down to that area and use that supply zone and then become demand. So you can get out of these trades, and you could also have I could have got out of all these. I mean, I would have profited on all those trades through this push up to the upside and this snap back here. I had these trades on here. If I show you where the limit orders are, so this one would have closed, and this one would have been hit actually on the run up here, and I would have been kind of stuck out a bit. Would have closed during London, but I just saw the pattern, saw the angle of attack, and just closed everything out. So this was lucky in hindsight, to be honest, and just not an ideal trade. But the trades that were previous to that here were awesome, and yeah, just recovered the hit that I took on Friday, and just back in the green now, which is great. So, looking at today's trades, I just like to let the big news days chill. No volatility is going to come in the market until FOMC happens. You'll see a bunching up of price and a small variance. So this kind of thing will happen until the news comes out. So, I mean, if we reach the bands, these are the areas you're going to reach. I would advise just to stay out, have a day off, leave it alone. We don't need to trade every day. It's part of the art of self-control, and the art of this is just to not trade when there's no trades on, or not trading when rules say not to, because if you can become disciplined in blind obedience to these rules, then you'll always trust yourself. So I would just, personally, I'm not going to do any trades, but obviously these are the areas where price will turn for some point, for some amount of time. We'll have a rejection from these areas. I'm not going to put any trades in today because I'm not advocating for any of them. But yeah, have a great day, enjoy FOMC, and we'll speak tomorrow morning. Cheers.